Welcome to the StockMinter.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. All right, guys, it's been a week since we talked. There really hasn't been a whole lot to catch you up on, so there wasn't a big reason to do anything for you on last Thursday. So we waited until Tuesday here to catch you up on where the markets are at. Now, last time I left you, we've only moved about 100 points. The last time I left you, we were at or around this 13.2 mark on the Dow. And now we're at 13.1. We went as low as almost 13,000. So, hey, we've almost moved 200 points in a week, high to low. That's pathetic. The markets are waiting for something. They're consolidating in through here. I'm going to show you here over the next couple of charts exactly where we've been even from the beginning of the year. And you'll see it really isn't all that impressive, to be quite honest. So we're still stuck in this little consolidation. I've been on and on about this 13 to 13.3 mark, really, and that's where we're stuck and have been almost the entire month of August. 13,000 to 13.3 pretty accurately fits most of the trading range that we've been trapped in. So what are we doing? We're waiting for some breaks, both up and down, to take our moves. If we can get back below here, I think we have a good shorting opportunity. Back above here is a good long opportunity. It's just a matter of being patient and waiting. You hear me harp about this all the time. If you watch me at all for any, or have watched me for any length of time, you know that I'm pretty conservative when it comes to my trading. I'm not one to just throw a bunch of money at the market and go, please go up, please go down, or whatever the case might be. You know, it's pretty planned, pretty organized. I hand select my stocks and decide what I'm going to do with those, and I really watch the markets carefully for the right setups, not just any setup, but the right setup, and then take those as they come. So now we're stuck in that same range. I'm just waiting for the thing to break like everybody else is. There's no big positioning game going on with me because, well, like for instance, tomorrow GDP numbers come out in the morning. So if those numbers come out and they're really good, could blast up, really bad, could blast down. If they're okay, we could go nowhere, we could continue sideways. It's really interesting to watch how the market's going to digest certain pieces of news. That can be a very good tip for you as to what the sentiment of the overall traders are, and not just we traders, you and me little guy type traders. I'm talking big dogs, investment traders, banks, institutions, Goldman Sachs type people. How do they digest this news? When you can kind of get a feel for what they're doing with it, it gives you a better idea of where we might go in the future. As it is right now, like I said, everybody's in a holding pattern here. Just a big consolidation waiting for a break. So that will be the theme of the video, and that is wait for the break as we move forward. Here we are trapped within this range of about 200 points, waiting for a break here, and that'll be your long or your short. You can see that on a daily as well. This looks like a move down because it is, sorry. Here's the move back up. This move down here looks like a pullback. So not a lot of volume the last few days, pretty quiet since the beginning of the week. Obviously waiting for something to happen, some big, I don't know what it is, but some major type news to come out and maybe blow the market one way or the other. The point is, we're just going to wait. This looks like a pullback, so I can't get mega bearish. I want to get bearish in through here, but I can't yet. The markets, the charts are telling me it's not time yet. To be careful. If I get short right now and this thing blasts to the upside, it could be what the Elliott wave people look at as a wave 3, and that's a major wave, and it's usually very strong, very quick, and it's unrelenting in its push. You don't want to get caught in one of those if you're short. It's just a bad deal. Wait for it. Just wait for the break. So here we are in what looks like to be a little bit of a pullback. I'll wait. I'll let it resolve itself. Up or down, I don't care. Just as long as I'm ready for the move when it happens. But as it is, look, we have pushed and chopped and hacked and swarmed and moved all the way up into this upper area of 13.3. Pull back, move up, and now maybe back to that consolidation mode. 1, 2, 3, 4 days we've been stuck in this small little 1 to 150 point range here on the Dow. If we go all the way back to June, you can see the climb. Okay, the climb's been about 1,000 points. We'll just call it 1,000 points. But that's since June. Just not really much movement. Chopping up and down. Very difficult. That's why you have to wait for the break, because these markets are, like I said, very hard to call right now. And if anybody's out there saying, oh, they're definitely going up, you know what? It's a crapshoot. If it goes up, then they'll pound their chest and talk about how great they are. And if it goes down, they won't say anything and you won't hear anything from them. The truth is, nobody knows which way this thing's going to go. You just have to wait. I can make a strong bear case. I can make a strong bull case for where we're at right now in the markets. The truth is, I don't care. I'll just wait and run with whoever wants to get aggressive here. Here's your NASDAQ. I like this. Obviously, O is to the long side. Don't usually like to short the NASDAQ, so would prefer to wait to see what we're going to get. But here's that well-defined range. The last half of the month has been nothing but straight sideways, 2750 and 2800. 50 points, side to side, very difficult trading. If you've been getting your hand slapped lately, you go figure. It's very difficult to trade this to the sideways. If you're up for the month, good job. It's been very difficult, especially in the last half of the month. It's been very difficult trading. And this usually happens when things start to consolidate. They go sideways, and it's very difficult to make a call in through here unless you're very, adept at getting in and going ahead and just taking what the market gives you, getting out and calling it good. Small gains usually lead to big gains over time. But here you can see it's pretty clear. Back above here is where I'd like to see that NASDAQ get before I start looking for a long play. Some people are going to be talking about this inverse head and shoulders on the NASDAQ. I would tell you to ignore them. It's not you can call it inverse head and shoulders if you want to, but the truth of the matter is it's a consolidation. So we can find head and shoulders patterns in here. I can find inverse head and shoulders patterns in here. I can find all kinds of fancy stuff. It's just a consolidation. Wait for it. I always like the NASDAQ long, so up above this area here is where you want to be going with your long plays on the NASDAQ. Here's another good look at it. Pull back, jump up, pull back, maybe another push to the upside. I would think we're going to see a resolution of this over the next couple days, so be watching very closely with this trading, especially in the after hours. Would not be surprised at all to see a bit of a gap up, gap down, something to that effect that kind of clears this stuff out. If you can't beat it, gap it, and that's what the market loves to do on news like this. The GDP numbers come out before market open, and that might be what does it. Here we are holding this overhead. This gives you a great look of the market since the beginning of the year, and just kind of dialing it all down. Look, 2450 to 2800. This is the range we have been working with since the beginning of the year. Is it up? That's sideways. I mean, yeah, sure, it's up, then it's down, then it's up. It's all sideways, guys. This is, so tedious for long-term traders. If you want to get into something at the beginning of the year, a lot of times you sit around and you wait and nothing really happens. It's frustrating. It's very frustrating, especially if you started getting long here in the March-April time frame. You're basically back to break even and you're almost done with the year. So once again, using caution with your trading, you don't know which way this thing's going to go for sure. Nobody does. You just wait for the breaks. We are right back to the highs, though. So, of course, since we're hanging around up here and since we're holding on up here, I can't get mega bearish. I just can't. Breaks of these overhead areas could cause a lot of short covering to occur, and at that point, it's off to the races for the bulls. So combine that with any kind of good news. Obama comes out and says, hey, I'm going to do this or do that before the election, and gone, baby, gone for the bulls. So don't get your hands slapped. Be very careful in through here. Point is, wanted to show this to you from a weekly perspective. It's very, very choppy, very sideways. All the markets look this way. Here's the SPX, same thing, stuck in this range, looking for a long here and a short here. Recommend you just simply sit around and wait for the break to happen. Here we are since August 6th. About 1395 to 1425. Let's just go ahead and give it to the bulls here. 30 points basically. 30 points, high to low, since the beginning of the month. Big deal. Who cares? This is nothing. This can be done in a day, easily 2 days, in any kind of a normal market. The consolidation continues through the summer. As we come into now school starting, and we should start to see the volume start to pick up again once August is over. So let's wait till the end of the month and see if that starts to slowly work its way in towards, I'd probably say mid-September or something to that effect is when it would really start to pick up, early to mid-September, as opposed to the first day of September. I wouldn't expect that. But waiting for this consolidation to break itself, take your trade, long or short. The same thing's true on a daily. Look, this looks like a move up and a pullback. That pullback into the 20-day moving average sets up for some very nice support. That could be your launch to the upside. The volume's very weak. It's been dying off. Nothing to really get too concerned about. One way or the other, we're just sitting around waiting. Back to these highs at 1420, 1425-ish or so, if you will. These are going to be your moves to the upside that you're looking for. This is your break to the long side. Back here, got to get back below this area here before I start getting any kind of interest in a short on the SPX. As of right now, any kind of pullback, any kind of drop, any kind of selling has simply been met with more buying. The bulls are still showing, hey, we're around, and we're not really too afraid of where the market is right now. The VIX is starting to move up a little bit. You can see it's into its upper range, though. This also makes me a little bit weary, or a little bit I shouldn't say nervous, let's just say cautious, from the short side. I mean, we're into overhead resistance now, and if it holds like it has in the past, you're looking at a shot down in the VIX, which should coincide with a move up in the markets. We'll see if that actually works itself out that way. But the VIX, you know how I feel about it, 15 to 20. That shows complacency. We were into this low area of 13. I was salivating. Did very well on some VIX longs down in here as this thing drove itself back up. Now I'm just kind of sitting around waiting again. If this thing pulls back, guess what I'll do? I'll jump back in, but not until we get down into the 14-ish area on the VIX. Otherwise, let's look to see if we can't break the top of this thing before it's all said and done. That's starting to set up very nicely, as this is a falling wedge, which is more bullish than bearish. The same thing is true of the VIX weekly. As you can see on the weekly chart, we have bounced down here. We're headed back to the upside. I like what I'm seeing down here from a bullish standpoint concerning the VIX. Any kind of harder push, we're looking for this 1850 to hold, and ultimately we start to get back outside the 20. Things could get very interesting for the bears in the market if we can get that VIX back up above that 20 and close above that 20. Very important to close back above that 20. That might be a ways off yet. We'll see, when and if that happens. But the point is, right now we're still in complacency mode with the 15 to 20 mark, and having hit 13 shows extreme complacency right now in the markets. They're just not all that worried about anything. FAS on the 60-minute. Look, this is real simple, guys. Long here, short here. Put these lines in your chart, wait for the break, and take the trade. I think these are going to be good moves once we get this thing going, if we can just get out of this stupid consolidation. Let me just tell you that sometimes these consolidations take a couple tries to get it right. It'll break above and then shoot back below, and then break below and then shoot back above. Very common for this to do it when we're in a tight consolidation, awaiting for that next larger move. In lieu of that, make sure your stops are in place. You can back off the position size. I don't care what other decisions you make on it, but make sure your stops are in place. Don't get caught on the whip where it pops out to the bottom, you go short, it pops back to the upside, and you go, yeah, well, it'll be okay, and then it throws itself through the upside. Don't get caught in that. These consolidations are notorious for whipping people out, so you got to be careful. However, if it breaks below, breaks above, you get in, your stop takes you out, try again. I like multiple attempts on these types of things. I'm not afraid to do it a couple of different times just to make sure that, maybe the first one was just, kind of wiping things out, looking for that next heavier move. Don't want to get caught going, oh man, I took it the last time and I didn't take it this time and I wish I would have, and on and on. Just go ahead, and if it's a good trade, go ahead and take it again. It's the beauty of the markets. You can always get back in. Gotta love that about the markets. So what if you got stopped out last time? Big deal. Move on, get over it, and get back in. Don't miss it again. FAS daily, the entries I have on the 60-minute are same here. As you can see, the consolidation hasn't left us. Since we got into it about the middle of the month, here around the 95 area or so, it hasn't moved much. We're about a buck up from where we were 2 weeks ago. So just not anything really showing much movement at all. Here is your FAZ now, up above here, down below here, long and short, depending on which one you like to play. This is another really good one to watch. It's only a $20 stock, so it allows some of you with smaller accounts to get in and play along. This one I really like below 20 and above this 2075 area. There you go. I think that makes it pretty clear right there. Looking for the bounce one way or the other. We'll see which way that resolves. Like I said, GDP numbers might have something to do with that. But definitely one we're taking. If we get a big gap down on some kind of a move and this gap's up above this area, the other second entry you could take is a 21 long. That's not a bad opportunity either on the FAZ. So watch that level. Same thing's happening on the daily. Got ourselves into what is probably more of a falling wedge and less of this channel at this point. It's starting to get a little bit tired down here. Doesn't mean we can't head down a little bit more, but it does show that the bulls tend to be weakening a little bit, which means this FAZ should, I would think, over the next couple weeks start to really get some legs to it. So, regardless of whether or not we move up or move down, I think a pullback is in the works here pretty soon. And when it is, this FAZ is a very good vehicle to trade, one that I actually like to trade myself. So, here's your long, here's your short. This is marked on a daily, so it is a little bit wider because you need to be a little bit more conservative from a swing trader's perspective. But on that 60-minute, love those entries. Don't miss it. That'll do it, guys. It wraps it up. Okay? You like the video, sign up for the newsletter. $28 a month, $1 a day. You can quit whenever you want to. You're not tied into it for a year at a time. I don't make you sign any contracts on that. Those videos come out every day except for Saturday. They're similar to what this is, just a lot more lines, a lot more information, a lot more detail on what I'm doing and what I'm looking at. The next step is the mentoring. The mentoring is so vitally important. If you really if you like trading but you just can't seem to figure it out, and you're frustrated, you got to have not just an education, but the right education. You can scour the internet and look at books and everything else, but ask yourself this question: the books I'm reading and the sites that I'm going over, are they making me a better trader? I don't know. You have to answer that question. Are they making you a better trader? If they're giving you information, that's great. Maybe they're making you a smarter trader. Okay, that's fine. But are you making any money? That's the whole point of the market. You can be a mega brain when it comes to MACDs and Fibonacci's and whatever else, but if you don't know A, how to use them, or B, how to make money using them, what's the use? Who cares? So the mentoring's your next step. Get a hold of me or send me a text, send me an email, call me, whatever you might. I'll send you some more information on the course. If it's a fit for you, get a hold of me and let's get started coming into the fall. Now that the summertime drolls are over with, typically the volume starts to pick up right now. People get more involved with the market and things start to move again, and you don't want to be left on the doorstep. You want to have the education in place and ready to go and ready to use when the time comes, especially into the November, December time frames. Things usually get a little bit more hectic around that time as well. And if you start now, you'll be more than prepared for that time to come and get you in, get you going, and make you some money by the end of the year. Let's get you off that slide. Let's get you off that slide and get you into making money. All right, guys, we'll talk to you soon. Have a good one. Bye.